Good morning, everybody. Today we're going to be walking past the garden and around the pond. I've got an analogy that I want to show you that I think is perfect for the situation. Before we get into it, if you wouldn't mind hitting the like button, ringing the bell, do all that stuff. It helps me out. Subscribe, check to make sure you haven't been unsubscribed. I've had some community members say that they have been unsubscribed 3 times. YT doesn't like the truth too much, especially when you talk about the shape the economy is really in. We do have a sponsor today, FE Battery Metals. Guys, check them out. They're a $10 million market cap. The stock price is at 45 cents at this moment. They've got 60,000 acres in the middle of lithium mining Mecca in Canada. And if you think we're going to go green, if you think we're going to energize the whole planet with green energy, we're going to need battery metals. We're going to need lithium, cobalt, zinc, all those things that FE Battery Metals has. So check them out. Thank you for the sponsor. Now, unemployment is up 40% since September 22. March ADP payroll went from 145,000 down to 261,000. You know, when I talk about unemployment and layoffs, I get in the comments and I get more people saying, you know, my brother-in-law got laid off, my son got laid off, it's over and over. And truth be known, tech layoffs are worse right now than they were of Q2 of 2020. Back in the pandemic, it's worse now than it was then. So it looks like it's not getting any better for a while. Discretionary spending is falling off a cliff, with people like Best Buy laying off hundreds of people. Most of the stuff in Best Buy is discretionary. You know, you can live without that stuff. And that's what people are doing. M2 money supply is contracting again. We're at 4%. I'm going to try to put this into perspective for you guys. The first time this happened was in 1870. That was the banking crisis. It was at 2%. That was also known as the Long Depression, where we experienced stagflation for 2 decades, some real austerity. The third time it happened was in 1893, when the gold reserves fell below 100 million. 100 million. Yeah, I'd say we had a lot more liquidity now than we did then, but that was back when a dollar was a dollar. But the important thing to know was the M2 money supply contracted to 3%. The third time this happened was in 1921, the Depression. Not the Great Depression yet, but this is, to quote Milton Friedman, an unnecessary contractionary monetary policy to fight inflation by the Fed. Does that sound familiar? There's my analogy right there. That tree that's in the water, we'll get a little closer and talk about it. But that was in 1921. Now, the M2 money supply was 2% then. It's 4% now. Now, in the Great Depression, it sank to 12%. Now, that was pretty rough, and we all know how bad that was. We didn't live through it, but we've heard about it. My grandfather talks about it a little bit. He usually likes to talk about Jesus more than anything. But I'll try to get him to talk about it again. Good luck with that. He loves to talk about Jesus, which is really cool. What the Fed is doing is working. They're wanting to tighten. They're tightening monetary policy. They're making it harder to get loans. They're going to make it a lot harder to pay off loans. When you look at these commercial mortgages that have to refinance at higher interest rates, this is going to bankrupt them. This is the big story, is when these businesses go belly up, these zombie companies that are barely hanging on. Well, we're about to find out who's swimming naked when the tide goes out, and it's going out fast. This tree, this big oak tree, is right in the middle of the water. Now that's a problem for the oak tree. But a long time ago, I put a deer stand. If you can see it up there, see that deer stand? I put a deer stand in that tree when I first moved here, and knowing if I left it in there with a chain wrapped around it, it was going to hurt the tree. I also knew that I was going to build a pond one day. I wasn't in a big hurry, you know, it'll be all right. Well, sure enough, I built the pond, and now the root structure is being suffocated by all the liquidity that's around it. It cannot breathe. That tree will die. Now, when you're walking past this tree or driving by, it just looks like a beautiful oak tree that's just massive and doesn't look like anything's wrong with it. The blooms came out this spring. But here's the thing. Here's the most eye-opening thing to me is how slow it is. How slow the economy's crashing. How slow this tree is going to take to die. Now, I would have harvested the tree for firewood, but when I built the pond, I had so much firewood, it was really amazing how much I ended up with, and I didn't really have time to mess with it. So I just figured I'd wait till it died and then I'll harvest it then. In the meantime, I'm just gonna watch it die. You guys know my plan B, and what I talk about a lot, is campers. If you have a camper, you've got a way to get out of Dodge. No matter what the situation might be, you can hook up to your camper, throw your belongings, what you need to survive, in it and take off. And if it gets rough there, you can move again. You know, I stayed in the camper a lot working, and when I first got to this area, I stayed in one for about 2 years. And you know, I got to realize how useful it was. You know, if I didn't like my neighbors, I could leave. But Camping World, for all you guys that have been waiting to buy the camper of your dreams, is having, and this is a quote from them, an RV garage sale. They're slashing prices on some of their campers to 50%. Thor is offering $5,000 rebates on some of their A-class models. RV manufacturers are in some serious trouble. New rigs are sitting on the lots that are 2 years old. And these dealers are having to pay the interest. They're having to just literally go belly up waiting. Waiting on what? For the economy to get better? For people to start discretionary spending again? As campers flood the market? This is something that's going to work out for the people that are in the market for a camper. If you've got one you're trying to sell, you might just have to hang on to it. But if you've been listening to the channel and it's not like I like what I'm saying to be true. I don't enjoy this kind of news. Just so you know, I do enjoy being able to warn people and help in that aspect. But guys, I'm doing everything I'm telling you I'm doing. I hadn't even mentioned the bank failures yet. So we had Silicon Valley Bank, we had Signature Bank, and now we've had FRB, First Republic Bank. The FDIC is now going to take it over because they're insolvent. And they say there is no more time for private sector rescue. We've got to jump in there and get them and take care of them. Guys, this was planned. There's just no other way around it. The Fed knew this was going to happen. And they're going to bail out their buddies, and they're going to push people into the big banks that are going to have the Fed coin, the Fed now. And this is, nothing new to them. Now keep in mind, 4 of the largest bank failures that's happened in my lifetime, 3 of them happened in the last 2 months. Washington Mutual was the first, back in the GFC. FRB was the second largest. SVB was the third, and Signature Bank was the fourth. So this is just a lot of news. Try to mull on this and think about it. And what are you going to do to get prepared? Try to think through that. Try to think in percentages in metals, percentages in cash. Emergency fund, have a nest egg. Have something you can get to, because they're tightening monetary policy. What the Fed is doing is working, and it's pulling money out of the system. They're burning money. They're getting rid of money to fight inflation. It's just incredible to live through these times and make history. So guys, let's talk about Fe battery metals. All right guys, I want to get into the lithium play. Fe battery metals, what they're doing, what they offer, a few things I like about them. the first thing is they process in-house. That's really cool. They've got 60,000 acres is right next to some big players, some billion-dollar companies. The likelihood of them being acquired by this big company, I don't know, but I would say that is the play that we're looking for. That would be par for the course. They're right there. They hit something big, they'll be snapped up by the big guys. Now, the International Energy Association, in every conference they speak at, say that lithium is the most in-demand metal that has no way of meeting its demand quotas if production doesn't rapidly scale. So there's only one miner in the U.S. that mines lithium, only one. There's got to be more. China is the main player here, and people don't want to put that to chance. I mean, we're seeing General Motors invest $650 million in a lithium miner recently. And we're not talking about Volvo, Volkswagen, Tesla, and Toyota. Who knows what they're going to do. That's just GM. So they see where the puck's going. They're starting to invest directly, just like Henry Ford did in coal, steel, rubber, stuff like that. They're not leaving broken supply chains to chance. They're creating relationships directly with miners. This is big news, and I think Fe battery metals could possibly do very well in the future. They're already up 160, 170%. So guys, check them out. I'll leave a link in the description. I'll put one in the comments. The U.S. is to double lithium by 2027. Biden says there is no more combustible engines by 2035. And we're going to go this way whether we like it or not, it seems like. So guys, have an awesome, awesome day. I'll see you in the next one. Later.